Ladies and gentlemen, good day and welcome to the Q1 and FY21 earnings conference call of INTENTECH Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, and thank you for joining us on INTENTECH Technologies Limited's Q4 and FY21 earnings conference call. Today we have with us Mr. C.K. Shastri, Managing Director, Mr. Jayant Dwarkanath, Director, Ms. Anisha Shastri, Director, and Mr. F.M. Nayak, CFO of the company. We will commence the opening remarks with Mr. Shastri and Ms. Anisha Shastri, following which we will have an interactive question and answer session. Before we begin, please note that some of the statements made on today's call could be forward-looking in nature, and a note to that effect has been included in the earnings release of the company, which is available on the stock exchange website. I would now like to invite Mr. Shastri to give us a brief overview on the company's performance and his views going forward. Over to you, Mr. Shastri.
Thank you, Siddharth. Thank you, everyone, for joining today's earnings call. Appreciate your interest in INTENTECH. I hope and wish you and everyone in your families are fine and safe. In the beginning of last year, we never expected that the country would go through this kind of a turmoil for such a long period due to COVID, which has really impacted most of us in our families, and we have lost some dear ones. Some of them have got impacted. Some industries faced a brutal impact. However, fortunately, we were also very nervous and we were also very we were all anxious. But the first thing which we took care is to take care of our employees, safety of employees. On 23rd March of last year, we were the first people we made, and the entire employees worked from home. The infrastructure was created. Everything what was required to be made was provided, and the first goal for us was to see that we do a complete support to all our existing customers, see that there is a seamless thing, because that was one of the first and important decision which we have taken, and we were acknowledged by almost 100% of our existing customers for the splendid work my team has done in delivering uninterrupted services and support, because as you all know that our solutions are mission critical and they need continuous support from us. And I'm so pleased to tell you that from that kind of a fierce mode, we have come out with a very satisfying results. As you all know that we have done 73.83 lakh crores with a EBITDA of 23.16 on a consolidated basis, and with a PAT of 18.07 crores, and that accounts for an EPS of 8 rupees, and also consecutively for the third year we've declared dividend. So we are pleased to tell you that the company is moving in the right trajectory and direction to see that we perform and improve better than what we do as we go along. We have seen some great traction thanks to pandemic. What has really happened is that the IT has seen upside IT business and our solutions, because everybody is looking towards the digital side of business. Of course, on the how do they digitize and their business processes, and they have found some of our solutions very, very apt for such requirements. I'm also proud to tell you that our long-term managed services engagement has completely come on steady state, and we are reaping the benefits of it. Some of the things, our platform and our product has been recognized in the Aspire leaderboard, which is the leading analyst company based out of UK. As you all already know that we've been recognized by Gartner and Gartner Magic Quadrant in the past. Our low-code platform is also seeing a great traction, which is in the coming years. As you know, that low-code is the new wave of the IT trend which the world is seeing, and fortunately we had taken that strategic decision of moving into it in the past, and we are seeing some good benefits coming out of it. On some of the things, we have improved our cash flows. Of course, from the balance sheet, it will be looking a little alarming, as most of our revenues tend to come from the last quarter, which we going forward have modulated. We are changing our engagement models and going about looking at it from an annuity-based revenue, so that the predictability increases. You will see that trend in the coming, in the future. And I'm happy to, more than me, I would like to hear your opinions, your questions. Please be open, and be willing to answer everything, whatever you would have to say. Thank you very much. Over to Anisha. Would you like to add anything?
Sure. Good afternoon, everybody. Thank you so much for joining this call. My voice may be slightly muffled behind the mask, but let me assure you, spirits are extremely high. Over the last 2 years, there were some very strategic decisions that we wanted to take as an organization. 3 fundamental pillars. The first thing was vertical. We were very, very heavily dependent on telco 2 years back, and the telco industry as such was seeing a lot of dynamism in it. And so we decided that we wanted to, given the fact that all our products are vertical agnostic, there was no reason why we were so dependent on just one industry. So over the last 2 years, we've made conscious efforts to diversify that, and you are seeing that pay off right now in the way of we have acquired 3 large private banks in the country, a lot of insurance players. We have also forayed into utilities this time and government for the first time. So that's one on the vertical side. Second was the business model. We wanted to get to more predictable revenue models, more predictable business models, both for the customer and for us. So over the last 2 years, we have invested a lot in moving towards either monthly or transactional models, and we are seeing that also pay off with our customers. The third thing that we focused on was the platform. We invested in the platform early on, and we continue to invest and grow it. And today we are also reaping benefits of utilizing that platform to deliver to our customers better. So these were 3 strategic initiatives that we had consciously taken 2 years ago, and all 3 of us, Jayant, Shastri, and I, are extremely committed to continue working on this to ensure that we go to the next level soon. Thank you.
Thanks, Jayant. Would you like to say something, Jayant?
In fact, both Anisha and you have more or less.
Hello?
Both Anisha and you have more or less.
Hello?
Can you hear me?
Mr. Shastri, we can hear Mr.
Can you hear us?
Yes, we can hear you.
both Anisha and Shastri have more or less echoed our views, and we stay committed to the path that we always have stated we have been taking. And I think for us, while we believed that the company was always in the right direction, I think from a results and a metric perspective, I hope that you, as our larger partners and stakeholders into our business, also kind of appreciate and acknowledge that yes, probably this marks the turnaround from your individual perspectives, and what we look forward from you in future is a lot more support and a lot more empathy. And what we can promise is we'll stay true to the course and see that your company does as well for you as it is destined to. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Bheda from Right Time Consultancy. Please go ahead.
Yeah, congratulations, sir, for your good results. I have 2 questions. Hello, am I audible?
Yes, sir. Yes, sir. You're audible.
See, when Anisha ji is saying that, and you have written in the press note too, it is a mission critical operation which you are doing in telecom, banking and insurance. So if you can throw some more color on that, what kind of service do you render in 3 verticals? That is the question number 1. And the second question is, what is the growth outlook for the current year? What kind of growth and margin we are seeing in this year? And our cash flow from the operation is very poor. So what steps we are taking to improve that and improve the issue?
Yeah. So there are 3 questions. One is the mission critical aspect of it. We are an enterprise product solution. So the thing is that we send bills, we make payments, we have digital engagement. Your policies are processed and sent out to you in insurance. Your credit card statements and your these things are banks are there, and then we do revenue reconciliation. We also do customer onboarding. For example, in one of our large telcos, in today we are onboarding about 1.3 million customers a day, which means that if you are onboarding this, if it stops for even half an hour, your revenues get impacted. Similarly, if your bills don't go and the payments don't happen, then the business gets impacted. And if you have your digital engagement, that is your transactional, today's world of digital, every step of a purchase or a action in any customer takes, he is informed digitally through mobile, through SMS, through email, through the website, the omni-channel thing. WhatsApp. Through WhatsApp. And when it comes to the next question which you put is on the cash flows. Mr. Is it Sudhir?
Yeah.
Mr. Sudhir.
Because of our heavy working capital side and high receivable, our cash flow from operation is very poor. So you can throw some light on what steps we are taking to improve that.
Yeah. See, some of our clients themselves, large clients, we have agreements of 120 days and so on and so forth. We are looking at, and all of them are blue chip companies, more than AAA rated companies. Whereas we are also looking at, doing the bill discounting factoring to see that, that is improved. Even otherwise, we are renegotiating and contracting this thing. You would see that this year, we have already, for example, when in the first quarter itself, we have almost collected about 40 plus crores from in the quarter as we speak. So we are on top of it. It is. I hope, and we are working on improving the cash flow performance.
Great. And the current year's growth outlook, if you can share.
Sir, it can only improve, it can only get better, and we are working towards that. We are also as ambitious as you all are. We are also this thing. I would not like to give any guidance, but definitely it will be much better than what this year you have seen as.
Great. And sir, last question: are we doing any government work projects?
Yes, we are doing, not directly, but through system integrators we are doing. One in Philippines for a large Supreme Court, and the other in India, and PSU also.
Great. So thanks for the opportunity.
Yeah, thanks.
Thank you. The next question is from the line of Rajendra Shah from Fidelity Management and Services. Please go ahead.
Shastriji, congratulations on the outstanding result. But from what are the three applications or things that would be combination of high volume and high profit, and which geographies?
Sir, currently, if you really look at it, our digital platform, that is the low-code platform, is one thing which we are seeing a big promise. Apart from that, we also have using, that is the new thing which we had added to our portfolio, our digital onboarding, our digital major traction we are getting is for digital engagement, especially with the COVID and pandemic. There is a lot better traction coming for digital engagement. And on the B2B customer experience, which we are seeing, we are also seeing the traction, but that is large transformation project, which typically it is. So that is about the three flagship solutions which we are looking at. As far as geography is concerned, typically till last to last year, we were always doing a 49%, 51 India, 49% overseas. But this year, the tilt is more towards the domestic side. There is the tilt in revenues, it is 70-30. Nevertheless, we are making our investments. Europe is our next, Europe and Middle East Africa are the good this thing. Hopefully, today we say that, we have customers across 4 continents in over 40 countries. We right from Fiji Island in the east to Mexico in the extreme right, we have our customers. And hopefully we will add, we'll become one more continent we'll add, and it'll become transcontinental this year. We are making the right things. And our current sales model, we are engaging more through system integrators and partners.
And Shastriji, what about constraints and headaches that you face in running and growing the business?
Sir, the biggest challenge which we face is for enterprise business as such. You need the selling cycles are very long, and the stakeholders who are involved, because you have the business operations, the IT, the architecture teams. They also look at the selling cycles is one big headache which we see, because sometimes these large multi-billion-dollar companies, the whole process is in place. At the final stage, the entire management or the teams are changed. Then again, you restart the cycle. But today we are well poised to make the right investments and grow the business, build more brand. You will see us more. We are taking initiatives on the digital side of the marketing also. And you will see that is the biggest challenge which we have, the long selling cycles.
But Shastri, you should probably make it more sticky.
Sorry, just to add to what Mr. Shastri had said, and to kind of build on your own question. Until about 18 months ago, we were also concerned that we probably did not have the wherewithal to kind of expand into the overseas territories, which is ideally where we aspire to be, because that's where is the biggest bang for buck for solutions that we build. And we've also seen from past experience, we've seen that the margins that are afforded out of overseas contracts are far, far more than what we have ever experienced in India. And so we also, you would also have been a part of conversations with us where we had said that we were probably scouting for partners who probably could partner with us both financially and strategically to kind of progress this endeavor. But in the past 18 months, thankfully, and I'm keeping my fingers and toes crossed, because of our own engagements with large system integrators and large projects that we have been part with in India, with internal accruals itself, we've kind of shored up, if not the money muscle, at least the mental confidence that in the immediate and the short term, we'll be able to kind of do it on our own. While at this point in time, we probably are not actively looking for monetary participation. We still are open to stakeholder participation in terms of people who can expand doors for us. And so what the change that has happened from the past, where we felt in our minds too that we were constrained for funds to expand, that I think we still are slowly putting behind that.
Thank you.
Thank you. The next question is from the line of Chirag Shah from EY. Please go ahead.
Hi. Thanks for the opportunity, firstly, and congratulations on the outstanding result. Also, thank you for the dividends that you've declared. My question was, while we've spoken about the past strategic initiatives over the last 2 years, could you also share some insights over the future initiatives and plans that the company has?
Yeah, thanks, Shah. As Jayant just now illustrated, we were looking at a financial and a strategic partner, but at the moment we would want to look at engaging. We are already engaged with very large system integrators today who are globally renowned. As the traction improves, we would want to see that we create joint go-to meetings with these people, because they have a reach, they have the brand, and the whole thing which we are looking at strategic partnerships. In the process, if something materially, if they would look at an equity or something like that, we will consider it as it comes. But the most critical aspect we'll be looking out is that our products and platform are tried and tested and trusted by Fortune 500 companies globally, and that it clearly proves that we have the right technology and we're in the right space at the right time. It's all today we need is the reach to scale up and grow this business. and primarily that will be our outlook, and we are already engaged pretty aggressively with large system integrators. We are talking to them on joint go-to-market, joint things, because there is definitely a very positive traction coming.
All right.
I hope I've
Thank
answered.
To build on Shastri's comment to your question, while in the past we were solely focused on very large enterprise accounts, now with our low-code platform, we are also actively looking at the smaller businesses where the sales cycles are far lower than what we have been experienced to, so that there is a separate line of traction and a separate line of opportunity that we can service.
Thank you. Yeah, that helps.
Thank you. The next question is from the line of Ajas Lakhani, an individual investor. Please go ahead.
Yeah, congratulations, sir, and to the entire team for an excellent performance. I'll keep my questions, very specific, and if you could respond to them in a specific fashion in the interest of the other participants. So first is on the managed service deal. The deal was truncated in the middle, and the value went that was likely to accrue over the tenure of the deal had got a little in terms of cash flow adjustments was a little skewed. So I just want to understand that is the same value of the deal, the monies that were likely to accrue to us on a yearly basis, along with the time period on the similar lines as what we had discussed?
Yeah, thanks, Ajas, for that. Just to let you know that, yes, we had lost 2 years of revenue because of the whatever, it was in public domain, the Supreme Court verdict and a lot of changes in the thing. We lost 2 years of revenue, but now, the entire thing is back on track. And we have become a complete critical aspect of it. They have no other, even they sunset their homegrown solutions, which they were using hitherto when we were present. So currently, surprisingly, we are able to see that the digital onboarding is, the volumes have not dropped, and they are going as they are happening. And the similar thing is because that they have a very large landline presence.
Yes.
And that is also going well. But of course, the growth in numbers is not there because it's a transaction-based thing. We are not seeing the growth what we want, but there's not much of a drop in the volumes what is happening. So we are having a steady income from them. I have to be honest and candid with you, there are some delays in the payments, but we are receiving continuous. That's the only customer where we are having some delays in our collections. But we are receiving some money, but there is part of it it's like a cash flow rotation which is happening. A part of the chunk is always pending, which is there with them.
Got it, sir. And sir, the ad revenue portion has started from them.
Yes, I hope I've answered your question.
Yes, sir. The ad revenue has started from them as well?
Hello?
Hello. Are you able to hear me, sir?
Oh, drop again.
Members of the management, please confirm if you can hear us. Ladies and gentlemen, we lost the line of the management. Request you to please hold the line while we join them back to the call. Ladies and gentlemen, thank you for patiently waiting. We have the management back in the conference. I would request Mr. Lakhani to please repeat your question.
Yeah, sir, you've answered my other question.
I heard your question, I hope you heard my response, or should I repeat that?
No, sir. We hear your response. I just wanted to, as a follow-up, the ad revenue has also started trickling through or not yet?
Yeah, that is a very good question. What we have learned is that because there was a participation which was supposed to come from the operator also in a significant way, which has not happened, and it is not, it is not becoming viable for us to pursue that anymore. So we are not seeing any revenue from that activity as much.
Got it, sir. That's very helpful. And sir, one understanding of our business was that, look, we sell the license and then, the small portion of it is in the form of annuity or change requests, etc. Now, Anisha mentioned on the call that we're trying to, streamline this into a more predictable annuity sort of revenue. So what exactly how are you making this transition, and what is the change that is leading up to this?
Yeah. See, what is happening is, that the entire world is moving towards the side of everybody is moving towards cloud. They don't want to have the data centers and so on and so forth. So one of the things, models which people look at is are a per transaction model, or when it is when it's not per transaction. Typically, large enterprises, are wary because their growth trajectory is high and their cash outflows will be heavy. So in such cases, what they tell us is that the license, the annuity, the AMC, and the as you said, the services, the support services, operational support. So they bundle it all together and they make a monthly payment to us. So we have two models. One is monthly fixed price, and the other is the per transaction price. That's how the entire thing is: the license, the services, the infrastructure. If at all we are providing infrastructure. In some cases, like in Europe and other places, we have a client in Europe where it is a private cloud. So if they pay for the infra, but they pay for the license and AMC services on a monthly basis. So this is the two models for annuity and this predictability. So this is how most of our new engagements we are looking at. Some of them, there is a definite shift also from the customer side to get into it. So we are able to convince them, saying that you will also be able to predict your costs upfront, and that way they're appreciating this model.
Got it, sir. And when they give you this monthly commitment, is there an underlying underwriting of some basic volumes that they commit to you, or that is not the case?
That is typically not a case, but most of our enterprise customers are all on the growth side. If you really look at the revenues going forward, 55% of our revenues will be coming from the annuity side of our business.
Sure, sir. Thanks for that answer. I would urge you that do not make the dividend payout. Use it to build sales and marketing and grow the pie instead, because the business is inherently very profitable, and I think we'd benefit far more if we can increase the traction of sales, which you can use to hire expensive resources with the capital. Thanks, Atan. I'll fall back in queue.
Thank you very much. Sure. Point taken.
Thank you. The next question is from the line of Suresh Kumar from Alpha Investments. Please go ahead.
Hello.
Hello,
sir. Can you hear me?
Yeah.
Yeah, sir. I see on the balance sheet there is 53.04 crores in accounts receivables. So I'm just wondering how the company would be dealing with account receivables moving forward.
Okay. Just to let you know that more than 50% of that has already been collected. And we have a pretty healthy cash flows at the moment. Only thing is that we have certain contracts with the large customers where their payment terms themselves are AAA rated, but the payment terms are 120 days, 90 days. So that is what it is, but it is not a problem. We are very well, at the moment, as I mentioned to you, that more than the 50% of that, more than 60% of that is already collected.
Yes, sir. If more than 60% is collected, that's a good news, sir. That's that's congratulations on that.
Yeah, thanks.
Yeah, sir. I think that's it. I don't have any further questions. Yeah.
Thank you. The next question is from the line of Prashant Kale, an individual investor. Please go ahead.
Hello, Shastriji. Congratulations for the fantastic result. And I think you have a really professional team running the company. I have observed one thing about the remuneration of the management. I can see that in last year, there was about 4% of the total revenue remunerated to two of the directors, 4%. And general standard is 1 or 2%. And let's say 2% is also acceptable. When it comes to 4%, that sounds too much. And on top of that, I think there is 5% for profit share also. That is okay. We can live with it. You guys are working hard. You must be awarded and rewarded accordingly. One thing I want to ask is that what was the reason for preferential shares to the promoters? Was it because of the need of fund, or was it because of raising the stake of the promoters, shareholding stake? What was the reason for the preferential shares?
If you really look at it, it was to increase the promoter shareholding, because we are continuously accused of that though we are been in this business and our commitment is fully on for last 20 years, we have made so many sacrifices, put our personal assets and everything at stake, and we have done it. But still, the investor community feels that we have to increase our stake. So what we have done is that yes, we have increased our remuneration so that we don't have any other income. So the same thing we are again putting back in the company to see that we increase our stake so that the confidence in us goes up.
That is one way to look at it, but there is another two more options, which gives confidence to the investors and which will really boost the value of the shares. If the owners go and buy from the open market, that is a good idea. Other one is the buyback. These two options are.
Sorry to interrupt you, Prashant. Your voice is breaking up. Prashant, may I request you to come in a better reception area? Your voice is breaking up, sir.
Yeah. Now I am in better reception area. Shastriji, I have one suggestion. I'm not criticizing you because you guys are wise and been in this business for a long time. There are two ways to increase, good ways to increase the stake. You buy from the open market or you buy back the shares so that your stake also goes up. We will be happy if the stake of the promoters is high. Then that gives more confidence. So if you use these two means, then the investors think that the management is not unduly rewarding themselves and they are getting rewarded along with the investors. That is my request to you, sir.
Sure. Point taken, well taken, and you will see some of those actions also.
Thank you very much.
Thank you. The next question is from the line of Milan Shah from Urmil Research Consultancy. Please go ahead.
Hello. Can you hear, sir?
Yes. But the voice is not that very clear, Mr. Shah.
Hello.
Mr. Shah, may I request you to come on the handset mode, sir? You're not very clear.
1 minute, madam.
Thank you.
Hello.
Hello?
Can you hear me, sir?
Yeah, we can hear you.
Congratulations, sir. After some time, you started.
Sorry, Mr. Shah, it is not very clear. Sir, your audio? We cannot hear you very well, sir.
Now, can you hear?
Yes, this is better. Thank you. Please go ahead. I would request you to speak slowly, sir, so we can hear you better.
Okay, madam. Congratulations, sir. After some time, you start Concall. And my request to continue was investor are in touch with company every 3 years, 3 months. And Congress also, Anisa madam is joined in Concall. And they have given very good presentation of company. My question is, someone has asked and you have replied it. I want to know intelligent assets under development, which is cost of 5.96 crore. For what is this amount is fair, sir?
Yeah. So what for about last 15, 20 years, though we are a product and platform company, we never capitalize any of our the product development. And this is towards that which we have done towards the product development, the new product development which we are putting in the thing.
It is new product or it is which is developing? Hello. It is going to develop new product or it is existing product, sir? Hello.
Yeah. That is. Hello.
We can hear you, members of the management.
Yeah, I've answered it. I hope it is fine.
Okay. Sir, one more question. The employee cost is going to down last 3 quarters. Is it going to continue or it is for lockdown period effect?
I didn't clear. Sir, can you repeat the question?
Employee cost is down since 3 quarters. It is going to be decreased or stable, or because of it is a lockdown, so work from home effect on company?
No, the employee cost will be going up. We are scaling up for the new model of managed services approach. We will be increasing our people, and with this thing we have in fact, in our difficult times, we had a lot of our employees who were taken a cut in their salaries. We are compensating them better. So you will see an increase in the expenses. But it will not significantly, it will offset, majority of it will get offset from the savings what we have towards COVID, like on the rent, travel, and other conveyance expenses have come down drastically, that we are compensating largely from that savings towards the employee benefits. So you will see a marginal increase in the employee costs.
And just to add to what Mr. Shastri said, we will also continue investing in sales people internationally. So that will also add to this cost.
Oh, okay, good. Thank you, and this is for future. And I guess Concall is going to be continuous every quarter.
Thank you.
Sir, we would want to, that is one thing we have yet to take a decision. We had taken a decision last year that we will do a call annuity, but if not annuity, we will do a 6-monthly, the earnings call. Because we would want the results to speak, not, we would want, to be more focused on business. And I can assure you that, we are available whenever you have anything.
Thank you, sir. And good to hear you. And best luck. Thank you, sir.
Thanks.
Thank you.
Thank you. The next question is from the line of Prateek Shahanan, an individual investor. Please go ahead.
Thank you for giving me an opportunity. Am I audible, sir? Can you hear me?
Yes, very clear.
Sir, my question is already been answered by you. Point was raised by the earlier analyst that if you can, promoter can increase their stake from the open market or something like that, then that will boost the confidence of investors and other stakeholders. So I was on that point, and I think you have already answered that. And I would like to congratulate you for this good results and best of luck for the future.
Thank you. Thank you very much.
Okay.
Thank you. The next question is from the line of Abhishek Kapoor, an individual investor. Please go ahead.
Thank you for the opportunity. My question is again on trade receivables, which you have answered that you have received 50% of what is outstanding, which was on 31st of March. But my question still remains, if you see at the trade receivables, which were 53 crores, it is almost 9 months revenue of the company. And when you say that receivables are due in 90 days or 120 days, we are saying it is almost 270 days. So this does not match what you said actually, 90 days and 120 days.
No. See, there is one customer where we are definitely having a longer outstanding, as I mentioned. Apart from that, most of our collections are well within the 120 days. The fact that, as I mentioned, more than 60% of our collections have been, from the 31st March outstanding has already been collected, itself is an evidence from that.
And is it okay for you to divulge that out of this 53 crores, how much is that particular customer?
That single customer?
Yeah, the largest one.
No, we cannot reveal it, but we can. If you would want to have a personal call, we could do that. It is not very significant.
Okay, it is not significant.
Yeah.
Right. Thank you very much.
Yeah.
Thank you. The next question is from the line of Sumit Kothari, an individual investor. Please go ahead.
Hello, Mr. Shastri. Hope you're doing well. Congratulations for a great set of numbers. My question is regarding the other expenditures that we see. I mean, can we get a breakup of the 7.5 crores that we have incurred in Q4?
These are related to the other expenses are related to advertisements, statutory audit fees, business promotion, and what we have all directors' remuneration, professional services. What we have also done is that for one of our large engagements, we had to hire a lot of contract employees, that is the chartered accountants and all of those. We have hired about close to 30 plus or so chartered accountants for delivering the project. That is also a part of that. Of course, the travel expenses come down. Those are the significant costs.
So just to understand the trend, will it always be something like 22% of the revenue, or it might be independent of the revenue and might change?
Your voice is breaking, Sumit.
No, I was saying that, is it always a percentage of revenue?
Hello?
Or 22%?
Hello?
Can you hear me now?
No, I lost you completely. Your voice was breaking.
Is it better now? Can you hear me?
Yeah, much better.
So what I was saying is that I see that it's around 22% as a percentage of revenue. It is always going to be this number, or is it going to change on a quarter-to-quarter basis, the other expenditure that is?
It will be in and around that. The other point is that, we are also, trying to hire a lot of, the professional consultants, even for our business development, senior people as consultants. So
right.
It will be in around that.
And since we are looking for opportunities in the global markets, and Intense always had higher margins in the international business. So, I mean, can we expect the margins to go up higher, or will it be around the same levels of around 28-30%?
We are working towards improving it. As you know that, the idea is, we have changed our team in the US. We've got some aggressive people. We are hoping that, they will produce. If America happens and you will see this company in a totally different league altogether.
Right. And what is the number of salespeople we have for the US and the Europe region? And then if you can give any ballpark number, salespeople.
Currently, we have, the thing is that we as an organization itself, we don't have too many salespeople. We have a lot of pre-sales consulting people, because what happens is, it is not a number of feet on the street. It is what is required. It is on the pilots, the POCs. The pre-sales support is very high. That is about close to 26, 28 people are there on the pre-sales side. On the sales side, we have about 9, 10 of them. So as bunched together, that's the number. Globally, we have about 9 sales people.
Okay, great. Thanks for answering my question.
Hello.
Thank you. Sir, we can hear you. I hope you can. Sir, can you hear me? Ladies and gentlemen, request you to please stay connected while we check the line for the management. Ladies and gentlemen, thank you for patiently waiting. We have the management connected now back in the call. We'll move to the next question.
We're so sorry for the Polycom drop. These systems have not been used in a year and a half, and I think they're getting rusty sitting at office.
Thank you, ma'am. The next question is from the line of Arjun Balakrishnan, an individual investor. Please go ahead.
Hi, thanks for the opportunity, and I must confess I'm quite new to this company, quite recently invested. So pardon me if the questions are quite basic. So can you tell me whether the products that you sell, your product, is it licensed for a lifetime, a perpetual license, or is it a lease-based model?
We mostly it is, the early deals which we had done were all perpetual, but now we are moving on to transaction model and annuity models currently. So we are also having some engagements which are on growth-based licenses. So the more number of CTNs or the call trunk number increases, based on, it's a growth license. If the more they add the customer base, that much more licenses which we get year on year. So we have most of the early deals which we did, we had no choice but to agree to perpetual license.
Right, okay, thank you. And just to follow up on that, so when I see the historical revenues, it's been a bit inconsistent, and that's typical of a product company, I understand. But because you're shifting this model from perpetual to, more transactions, can we expect a bit more consistency on the revenue quarter on quarter, or is it going to be still our expectations should be, let's look at it year on year and not quarter on quarter?
It would take, you will see that improvement from last year to this year, Mr. Balaji. The next year onwards, it will be improved and predictable, but you will see some improvement this year, definitely. For now, I would urge you all to look at it year on year, but definitely there will be an improvement.
Understand. And a couple of last questions. One thing about the dividend, I see you increasing the dividend, so normally that's viewed positively. But because let's agree that we are a smallish company, so don't you think it's wiser to kind of not pay any dividend and reinvest stuff into the sales and marketing?
It was just to, the idea was that there was a lot of expectations and cry from a lot of other investors that you never pay dividend when it's such a small equity. The impact is not significant. Why don't you give a goodwill thing? There have been different opinions, but I think I take your advice. It is. We also personally feel it is prudent to put that in sales and marketing going forward.
Yeah, considering the taxes on dividends nowadays, it has no meaning in my view to give dividends. Anyway, let's put that aside. Last question. Because, I think we have a decently good product, great product. Have you ever thought of going a slightly riskier proposition of raising more debt and increasing our bandwidth, to grow faster? Or because that is always a problem for smaller companies, right? To grow, to get the bandwidth, because cash gets you more cash. But is there any plan for somehow raising more capital?
At the moment, we don't have any plans, sir. With the given cash flows, given this thing, we are looking at some decent growth. But if you would want to, because the biggest problem which we have in our business is long selling cycles. So debt and long cycles, it was, we felt it, it is, though when it is required, we had taken debt. But
okay,
at the moment,
okay, understand.
Yeah.
Okay, understand. And finally, a bookkeeping question. I think somebody would have asked.
And Arjun, what our experience is always. Sorry, Jayant here. I'm Shakti's colleague. Our experience also in the past have been that the unfortunate, Vijay Mallya incidents kind of rub off on the smaller aspirants for bank capital. They tend to look expected. Yeah, they tend to look at us kind of far more keenly than they ever did in the past, I guess.
And just to add to what Jen said, the small debt which we have, I think we have about how much now? 1 crore? 1.66 crore debt. That itself, we have hundreds of...
And the nuisance value of servicing that debt is far more than the benefit.
Yeah, I understand. And I just curious to know what your view was. And final question is, regarding your stakes in the company, maybe there is some rules regarding what categorizes as promoter and non-promoter. But if you really put all the stakeholders who have skin in the game, what is the total promoter, not promoter, but I think giant stake I see as non-promoter. So,
between us, it is coming to 25.6, and employees put together, it's about 33-34% is what it comes to. It's a good question.
And after the warrants?
It will go up to 37, 38.
Okay, so it's close to 40. That's fine. That's healthy. Okay, thank you. That's it.
Thanks.
Thank you. The next question is from the line of Anil Kumar, an individual investor. Please go ahead.
Good afternoon. First, let me congratulate the management for outstanding performance, consecutive results declared. And I have one, I've been observing this company as an individual investor for a long time. And I just want one question. Is there any technological breakthrough or something? Can anybody explain this? Any advancement in technology? Because today world is moving towards technology.
Yeah, that's a very good question, Mr. Anil. The thing is that if you really look at the paradigm of, the number of, it was all people-driven, coding was people-driven. We have invested in strategic this thing. We are getting into artificial intelligence, AI, on the low-code side of our platform. Low-code is the next big thing which is predicted by the analysts and everywhere, and you can see that happening. Alisha, would you want to add?
Sure. Mr. Anil, just to build on what Mr. Shastri said, just like how when cloud came in, that was a big fad and it completely, disrupted how storage was done, right? And that's the same case with low-code infra. It disrupted the infra market, and that's the same case with low-code. In fact, if you read the Gartner, Forrester, etc. reports, they say that more than 60% of all app development worldwide will move onto low-code platforms. And we made the right calls at the right time, made the right investments at the right time into that space, and we continue to grow our low-code offering. We leverage it ourselves as well. We are also now seeing our customers benefit from it, and that is one very strategic initiative that we have taken that we are very, very sure will pay off.
So just to build on what Alisha and Shastri have said, sir, that, as I also stated a little earlier in the conversation, what this also opens for us is a new market that we can service. So we no longer will be restricting ourselves to large enterprise accounts where while the dividends are there over a long-term period, but for us, we would like shorter sales cycles and quicker cash cycles, and the new segments of addressing smaller businesses through our low-code platform will afford us that opportunity.
Yeah, thanks for the information, and I wish best of luck for coming year, because the future is technology, and you are one of the few companies or products companies in this country. All the best.
Thank you, sir.
Thank you. The next question is from the line of Amit Gori, an individual investor. Please go ahead.
Thank you. First of all, congratulations to the management for good set of results. Sir, my question is related to an announcement of a contract called Mission Critical Services. Can you please guide us through the contract value or the execution periods related to that particular contract?
Sir, unfortunately, we have a confidential NDA agreement. We can't reveal the name and the contract size, sir. I hope you'll appreciate the...
Right.
Yeah.
Okay. But any execution, any information if you can share with us?
No, we are engaged.
Name or the value.
We are engaged in the contract, fully, deeply engaged, and the contract implementation is going on. And it is definitely of a lot of prestige and pride to us in terms of the national importance it carries.
So has the execution started or?
Yeah, the execution has started.
So what I can add to what Shastri has said is that, like, over the last 2 years, most of our contracts are annuity, are contracts where we can see predictable annuity over a period of time. And so this all our new engagements add to that factor of predictability that all of you are looking for from your company.
All right. And one more thing, can you please also guide us if what are any number of clients added since last 1 year, or what is the current pipeline of sales?
Yeah, we have added about 4. We have added in insurance, we have added in banking, utilities, and government through system integrators. But all it put together, it would be about 4 to 5 customers.
Okay. And our business is such where up until now our business has always been where volume of sales is not as much, but what we add in terms of to the top line is significant from each of those.
What happens is that, being enterprise customers, we have also put a strategy together to see that we deliver more value to our existing customers, because as you must have seen, we have very marquee names in our list of customers, Fortune 500. So we are increasing through this low code and this thing, we are increasing our value proposition to our clients. So always it is easier to engage with an existing satisfied customer than go for a new hunting customer. So we put a very clear strategy this year to see that we increase our value to our existing customers and thereby increase our wallet share.
Right. And just as an additional data point, because most of you and even we are also we fault ourselves also on that data point, which is historical, which we tend to call ourselves a telecom focused company. But we were a telecom focused company. But if you look at our client mix today, you can call us a telecom, insurance, and banking company. And almost across in India, we address that market.
Right. Thank you. That's all.
Thank you. The next question is from the line of Ritik Khanna, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. So congratulations on the results. Most of my questions have been answered, but I just want to know one thing. Whether you all are involved in customer acquisition, or is it just customer onboarding and management and like other similar services?
What do you mean by acquisition?
I mean, like you all acquire the customers, like something similar to what Apple does.
No, we don't. We help our customers acquire their customers. That is what we do. And after acquiring customers, we help them engage with them. We help them send their required bills, payments, and other, after the support services which they are required for.
Okay, got it. Yeah. Thank you so much.
Thanks.
Thank you. The next question is from the line of Suresh Kumar from Alpha Investments. Please go ahead.
Hello, sir. Even though revenue growth have been decent, in terms of growth, when you compare it with other IT companies, the growth is a bit sluggish, I would say, when compared to the high growth IT companies. So I'm just wondering if there was a target of 150 crore revenue set in the next 2 years' time, what would the company be doing differently in order to achieve that revenue?
That's a brilliant, very good question. As we said that, we are three big things, initiatives. One is that we are taking up next 2 years. We are also, with the support of low code, we are looking at taking up large projects, whether it is government or thing in the digital transformation area, which could be of value of $5 to $10 million. A single deal. So that is one thing. Plus, as we said that we are increasing our depth and breadth of our value to our existing customers. The third thing is that penetrating, having very close ties with system integrators and partners. That these are the three things which will get us where we would want to be. Definitely, that these are the things which we are doing, and also increase our footprint in we are looking at opening up Australia, New Zealand this year, based on some, and if there is any new, we are doing currently mostly remotely. Yeah.
Yes. But most definitely the results are commendable and satisfactory, sir. Good job. And I'm wondering, like, you have that small debt of 1.3 crore, but you've got 14 crore cash on the balance sheet. Why not pay off that small debt?
Absolutely.
We are threatening the bankers that we'll do it if they stop being a nuisance to us.
Yes, sir. And to reach Sir, if you can achieve the growth trajectory, it will all be well-earned salary for all the directors and the management, because it takes a lot of effort to run a company and get to that sort of trajectory.
You're telling me, sir, we've seen the worst times. We really went through a lot of roller coaster ride. Being a product,
I know, sir.
It needs a lot of deep pockets and marketing reach, a lot of innovation, money into innovation. You have to always be at the cutting edge of technology. And, being a smaller company, we have to manage employee motivation, challenge, attract talent, all these. And thank you very much, sir, for your inputs.
No problem, sir. So my suggestion is,
on a lighter vein, Suresh, the reason why we held back paying back a debt was because until recently we were working towards acquiring the same customer as our own clients, which we have done now. Now we have no problem in paying back that debt.
Okay, sir. No problem. I wish we reach a higher growth trajectory when it comes to sales, and I think that's the only thing lacking. And my other sort of small concern is, sir, consistently in the market, like if Q1 is better than Q2 result, and Q3 is better than Q2 result, and Q4 result is better than Q3, that will have a positive impact on the stock. Whereas now what I'm seeing here is, of course I can't blame you, it's the sales cycle. Most of the revenue is sort of concentrated in the quarter 4. And then once we go to quarter 1, the revenues are historically, they have been relatively less. As a result, in my view, that's the reason why the stock is not doing as good as it should. Because if you look at the PE, it's around 10 times earnings, which is relatively less compared to what other companies are trading in the market.
Sure, sir. We are, as we said, we are reconstructing our contracts. We hope to improve that. And you will see them, you will see some change this year.
Okay, sir. Okay. Thank you. That's it, sir. For your future prospects, yeah.
Thanks.
Thank you. The next question is from the line of Arjun Balakrishnan, an individual investor. Please go ahead.
Yeah, sorry, there's a follow-up one. I'm not sure whether you can answer it, because lately there's been news on one of your publicly known project, I don't know, about a glitch in the website. You know what I mean, right? So is that related to us, or is it related to the SI? And I'm okay if you can't answer it, because it's something to do, but if you can, or if you can give us an idea about
Arjun, for the benefit of all of us Indians, let's hope that glitch is sorted out soon. Yeah, we are not directly involved, but let's hope that all of us are able to use that website soonest.
And thanks, all the best for the future.
Thank you. The next question is from the line of Prashant Kale, an individual investor. Please go ahead.
Thank you for the opportunity. Shastriji, I have one suggestion. We have 6 to 7 people as a global sales team, and then there are let's say 20 people supporting them for pre-sale, right? So, and if we want to increase our global reach and employ quite a lot of sales people globally, that will add up a lot of fixed cost, and the returns will come very late. Is it possible to employ, because there are hundreds of thousands of skilled IT engineers all over the globe, is it possible to identify some of them and employ them as a freelance salespeople? If they sell, they get commission. If they don't sell, they don't get nothing. By doing that, we will not have fixed cost, and we will only have cost if we get sales. Is that possible?
Yeah, it's a very good question. I didn't get your name. I'm sorry.
Prashant Kale.
Prashant Kale.
Mr. Prashant, it is a very good question. So what we are doing in increasing our sales is that you must have heard in one of the expenses which we spoke of. There are these enterprise sales is related to. It is not a simple sale. It requires a whole skill set what is required. So there are people today who worked as very senior positions like CIOs, CTOs of large enterprises who have taken voluntary retirement or they've started their own consulting firms. So we are engaging with those consultants as one aspect of it. The second aspect, you're absolutely right. So, an individual cannot sell, but a partner model where already they have some existing customers. So we are looking at roping partners where it is revenue share and profit sharing kind of a model. The third thing which we are trying to do is engage more deeply with the system integrators. Typically, system integrators hitherto used to be that people used to only come when there was the opportunity and for them to work with us. Now we are looking at proactively engaging with them, trying to work joint go-to-market strategies and other things. I hope I've answered, Mr. Pratik.
Yeah, you have answered it really well. But what I have observed is that Indian people are smart. If you train them a bit, maybe you can try on a pilot basis in smaller countries where it's not possible to employ a full-time salesperson. But if you give them little bit of training, let's say 5 to 10 hours of training, and try a pilot for smaller countries, and let's say deploy them, identify the customers yourself, and deploy them. Okay, contact this company and switch in for this product. So probably that will help you if it works or not. It's just a suggestion. Other thing is that
absolutely, Prashantji. I mean, your point is well taken, and in fact, it has been on our radar too. But you will also appreciate and acknowledge that hiring is one of the most challenging. Hiring the right person is one of the most challenging tasks for any company. And as a partner and a stakeholder in our business, we'd be open if you can also refer names that who you believe we can get in touch with. We'll be happy to have a conversation with anybody.
Okay, I have few contacts in Europe. I can suggest you for the smaller countries, Sweden, Norway, Finland. Other thing, I had one suggestion is that there are lots of e-commerce companies and chain shops in India, like DMart and all those things. Are we planning to foray into that area and help them to acquire their customers and register their customers? Because their turnaround is quite a customer churning is quite high. So, is there any plan? Have you looked into it?
No, we have not looked into it, but we will consider your suggestion and explore that vertical also.
For smaller brands, like let's say Indian Terrain is a Chennai-based company, smaller brands. They are small brands. They don't have IT expertise. They have now opened their online shop. And previously, they were in all the big shopping chains like Shoppers Stop and all those things. But now they have opened their own shop, online shop. Similarly, Sri Leathers is a Kolkata-based company, a small company having 30-40 shops. But now they are selling shoes left, right, and center online. Right? Okay. So these types of small brands who are weak in IT, probably if we target them and then help them to acquire customers and run their back-end things, that could be the one location where, because these people are family-owned businesses, not very good at IT.
Oh, sure, that's a good input. We will consider that.
Thank you very much.
Thanks.
Thank you. The next question is from the line of Shiv Kumar, an individual investor. Please go ahead. Kumar, your line is in the talk mode. You may go ahead with your question.
Hello, am I audible?
Yes, you are.
Yes. So congratulations. Long time coming. I've been investor for 4 years. Through the, I think, pain and thanks for a great set of numbers. Hopefully we get to improve from here. A few questions. And firstly, a suggestion. Can we release the results a little bit early? Because of all stocks, I always look for intense results. It always comes at the fag end of the quarter. So if you could, release it earlier, that would be awesome.
Sure.
Yeah. So the other thing is, I think a couple of years before in the Concall, we talked about the GDPR opportunity in Europe. Any idea how is that progressing? How is that turned up?
The point is now that got completely crowded, sir. They completely crowded and market. So we have, and also what is people are looking at is they're not looking at buying an IP to implement GDPR. They would want manpower, people, resources to do that. So we have not, continued to pursue in that direction.
Okay. Okay. My next question is we have a customer in US, right? I think which we implemented a SaaS platform. Now, what is the feedback on that platform, and have we done similar rollouts for any of the customers?
No, we were after that customer. We did not have a success there in the US. That's why you must have heard me. We have changed our team there. We are getting we hope to see some good traction this year.
Just to kind of address that differently, the client continues to be with us and is a very happy user of our solution. But our aspirations for that market, on the strength of those relationships, I mean, it did not take off the way we aspired it to do. And so what Shasti has stated is about the change in team and people.
Okay, thanks. So when we talk about the pipeline for the future, what is the pipeline size or quantum with respect to direct involvement other than integration with SIs? The SaaS platform model?
So we are having a decent pipeline, sir, decent pipeline to give us what we are targeting to do. Both on the system integrator side, we are working on some good couple of opportunities. And on the direct side also, we are working on a lot of them. On the direct side, we have more on the domestic front. Whereas the system integrator side, we are engaged with them on overseas opportunity.
Okay, sir. Thank you. My last question, sir, do we have any targets for 2025, say Vision 2025, 2030?
That's a very nice way, sir, of asking for a forward projection. We do have them internally. We just want to be cautious about speaking about them publicly because once bitten, twice shy. So we are working towards those internally, and we can assure you of that.
You'll see a significant growth.
Yeah. I'm sure I want, most others, want an Indian product company to be hugely successful. I think not always ask on revenue projection, but and some targets which, say, suppose we want to be every country or so many customers or metrics which indicates that we are really the product is globally. See, the reason why I ask is also because though the product is excellent and I think some of the Indian companies are even bigger than US companies, right? The number of communications customers. I think this is the telco is largest than any company in the world. But since we are not able to crack the lucrative US markets, thinking.
Sir, we are pretty focused to see that America happens for us. We are looking at, one of the things, probably the learning lesson was we tried to go directly in the US in the past. Directly, we have realized that, it's a tough call. So we are looking at partners, system integrators, through whom we would want to engage with the customers, because that's a totally a different market for approach. It can happen as far as these sales perspective is concerned, we hope that this there. You're very right. We are increasing. We would also want to become. We are across 4 continents. We want to become transnational, transcontinental, and we would want to see that we definitely increase and add with as many new customers as we go along. And the first significant thing was what we did was that, as Anisha mentioned, we have increased our vertical mix quite a lot from, instead of being just a telecom vertical focus, we are now becoming telecom BFSI. Also, we have cracked one utilities breakthrough, which we would want to replicate globally. Similarly, we are also looking at, medium and large projects for the digital transformation using the low-code platform.
Sure, sir. Okay, my last suggestion or input.
I think.
Yes, sir.
Sir, what I would urge you is that you could always want to spend some time, understand deeper things about our product, our company, this thing. I would urge you to make a visit. I'm sure there are many others who are on the call, just to give them an opportunity. Already we have crossed 30 minutes beyond our scheduled time.
Appreciate it, sir. It's been some time, so yeah, I think most people are excited to attend. Yeah, no problem, sir. Thanks.
No, you always welcome. You are always welcome to have a personal call to understand more deeper, sir.
Sure, sir. Thank you.
Thank you. We'll take one last question, which is from the line of Abhishek Kapoor, an individual investor. Please go ahead.
Sir, it's not a question, it's just a request. If you can, on quarterly basis, if you can reveal the number of clients we have and addition and deletion and total balance.
Sure. We'll do that.
Right. Thank you.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you very much, everyone, for taking your precious time to know about your company. We are committed. We have an excellent team. We have great technology products, and we will ensure that we do give the best to see that your company grows further. Thank you very much.
Thank you. On behalf of Intense Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.